Fears of the stock market collapsing. When companies increase their dividend during times like these, it shows me that they're confident that they'll get through these times. That's why in today's video we'll be going over 5 companies that have recently increased their dividend majorly. And guys, if you're new here, my name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. It would mean a lot to me if you guys could subscribe, turn on post notifications, smash the like button while you're at it, and of course, roll the intro.
Hello, I like money.
The first company that's increased their dividend majorly has been Target. Target recently increased their dividend by 20%. The stock fell over 30% in one day because of things that they cannot control with the overall economy, transportation costs, energy costs, etc. For me, this dividend hike is just a big slap in the face to institutional investors who sold out of the stock. Target's current dividend is $4.32. They have a really low and sustainable payout ratio at 28.05% and a 5-year growth rate of 8.45%. Did I not mention they also have grown their dividend for 54 years straight? I think it's silly and ridiculous that this stock is sold off so much, and I'll definitely be looking to buy more in the near future. The next stock on this list is one that I own and one that I love, which is going to be Kroger. Kroger just hiked their dividend 23.8%. And the stock has also been sold off a bit recently with, concerns about inflation and how they're going to respond with that. But again, just like Target, this is a big slap into the face to all the people that sold out. And it shows me that their management is confident that they'll get through this. Kroger, along with Target, also performs share buybacks. And they've been making some gigantic investments in themselves recently. I think Kroger is going to be a great stock for dividend growth over the long term and capital appreciation growth over the long term as well. Kroger currently pays a dividend of $1.04. Their payout ratio is really low and sustainable at 21.32%, and their 5-year CAGR is at a really nice 11.84%. The stock's been on a tear since Warren Buffett decided to buy in, but as I mentioned earlier, it's sold off a bit recently due to all the stuff that they can't control. So as Kroger keeps dropping, I might look to buy some more. Now, the next stock on the list is going to be Lowe's. I don't think I talk about Lowe's enough on the channel, but they've had some insane dividend growth recently. They just hiked their dividend by 31.5%. Lowe's is similar to Home Depot. They sell, home equipment, all that good stuff. Right now, I think Lowe's dividend growth is great, but I don't know what's going to happen if their free cash flow pauses. The dividend growth might not be as gigantic as it is now, but I'll definitely take these hikes if I were a Lowe's shareholder. Guys, right now, Lowe's pays a dividend of $4.20, a really low payout ratio of 26.08%, and a really nice 5-year CAGR of about 18%. And did I not mention they have 58 years of dividend growth? And guys, shameless plug here, but join the Discord if you guys want to see all my buys and stuff, because I might be buying some Lowe's soon looking at these numbers. Lowe's dividend growth is crazy, but I'm not too sure how sustainable it will be at these levels. But I think their dividend right now is definitely sustainable by their free cash flow, but I don't know if the growth is going to be as sustainable. The next stock that has had crazy dividend growth is going to be Pool Corporation, stock ticker Pool. Believe it or not, Pool Corporation sells equipment for pools, chemicals, all that good stuff. They have a really low yield right now of 1.12%, a really low and sustainable payout ratio of 17.81%, $4 dividend. They recently increased their dividend by 25%. They have a 5-year CAGR of 21.20% and dividend growth of 12 years straight. This is really, crazy. I don't know how sustainable it's going to be by the free cash flow. I know our friend Jonathan from the Discord is really big on Pool, so it'll be interesting to see, he probably knows more about it than I do. But Jonathan, leave a comment, what you think about Pool, if it's a good value, etc. And guys, the last stock that's going to be on this list is a healthcare favorite of many, which is going to be AbbVie. AbbVie pays a $5.64 dividend. They have a pretty nice yield at 3.7%. Payout ratio at around 42%, which is pretty sustainable for AbbVie's free cash flow. 5-year growth rate is 17.50%, which is really nice, and 9 years of consecutive dividend growth. Guys, that's going to wrap up the video. Thank you very much for watching. I tried to squeeze this one in. I don't have a lot of time on my schedule right now. If you enjoy content like this, videos about dividend investing, smash the like button, subscribe, turn on post notifications, and of course, do dividend stocks, not drugs. Have a good one.